What is going on, ladies and gentlemen? Hope everybody is well. Welcome back to Masterclass Day 10. For today's lesson, we are going to be focusing on decision making, how to have the best decision making when we're making our trades, whether that's for our entries, take profits, or exits, or simply just, having a simple and comfortable understanding of our market, of the market, and of our trading moving forward. So gonna go ahead and hop on the charts, go over 5 key things that I want to share with you guys and go over. And of course, per usual, if you guys have not watched the previous masterclass lessons, make sure you guys go and check those out as well. Regardless of if the topic is something that you're already comfortable with, I am confident you guys will end that lesson being either more comfortable with that certain topic or end that lesson learning something new. So let's go ahead and hop on the charts here and get things started. Okay, so boom, now that we are on the chart, okay, let's go here. Make this smaller, boom, boom. What is my camera doing? Okay, perfect. Okay, cool. So here on the chart, like I mentioned, I have 5 key things, different things that I want to go over in terms of decision making. Now, I know some of you guys may be probably confused when it may come to your trades or when it just comes to overall, making those decisions within the market. So that's why I want to go over 5 key things that are things that I focus on and use every single day and should be the same exact for you guys. So let's go ahead and get started. So number one is just going to be understanding overall market conditions, right? Obviously, understanding what the market is doing that current day, how price is moving, what the market has been doing the previous days, previous weeks, understanding market conditions as a whole, understanding how the market has been moving is going to be something that you want to take heavily into consideration when you are making your trades, because also understanding that can also give you a bias towards whether buyers are in control and or whether sellers are in control. You can obviously utilize that information whether you want to either ride/trade with the bullish momentum or trade with the bearish momentum. So just overall understanding market conditions is very important. Or also, let's say that market is just completely ripping. Market has been super bullish lately, whether that's the market as a whole or one specific stock. Understanding those bullish market conditions is going to help you a lot more because you're obviously going to be more on the bullish side. So that's going to be number one and a obviously very important thing. Now, this is going to be number two. Now, these are not really ranked. These are just, in order. So there's not one that's going to be more important than the other. These are all going to be all very important and all equal to each other. So moving on to number two is obviously being aware of news. Now, this is of course why I go over news with you guys every single morning in pre-market review, making sure that we are aware of the news going into that today and prepared, so we obviously don't get stuck within any type of trading or any type of news trading and have that trade flip on us. So just being aware being aware of news as a whole is going to be very important, because let's say that you're not aware of news and you're trading and that news event comes out, or that news event is coming out soon, market is either going to flip on you or market is either going to move very choppy due to the fact that price is likely anticipating that news event to come out first before it obviously picks up within volume. So that's going to be something very important that you want to keep in mind as well, is just simply being aware of the news that we have every single day, every single morning, pre-market, or even the day before. That's also why sometimes I'll do YouTube lives. You want to make sure that you guys are aware of the news that we have, because let's say sometimes there will be impactful volatile news. Maybe those will be some type of days that you'll want to maybe not trade on, step away from, due to the fact that we'll just have crazy price action, whatever the case may be. So that's going to be something that you want to take heavily into consideration as well. Obviously, news. I emphasize that though a lot, but I know some of you guys just completely forget about it. So that's something that's very important as well. Number 3 is going to be our key levels. Now, this is of course something that we talk about all the time as well, but just being aware of your key levels and having them drawn out, because you want to make sure that you have the most confirmed / strongest key levels always on your charts at all times, because what that does for you is it just gets you more of a comfortable understanding on the charts, and B, it helps you a lot more with your trades. It helps you understand where price is likely to reverse and where price is likely to bounce from, and you can utilize those areas to take your entries, to take your take profits, to take your exit levels, whatever the case may be. So having your key levels always out, and different key levels, other than supply and demand, you have your fair value gaps, you have your support and resistance areas, you have your order blocks, you have pre-market highs and lows. There are a bunch of different things that you want to make sure that you have charted out, because like I have mentioned, these key levels are pretty much areas that are likely to present price with a reversal. So we as traders want to make sure that we are aware of where those reversals are likely to happen. So we can either take advantage of those reversals to get in, or take advantage of those reversals to get out and catch the most profits possible. So that's going to be very, very important as well. Now, moving on to number 4. This is going to be somewhat similar to number 3, but this is going to be our strategy. Now, every trader is going to have a different strategy, right? But of course, I'm always going to be emphasizing supply and demand, trading with supply and demand. But I know some of you guys do the same, but you kind of have a twist how you trade supply and demand, right? So when you guys have your strategy, or if you are practicing to use a strategy, really what this means is just make sure that when you are trading, when you are looking for these confirmations, everything is aligning to your strategy, right? Price is moving towards where you want to move it to. Things are aligning to how you want it to. You obviously make sure you have your risk controlled, you have your stop loss in place, take profits in place. Make sure that you have things prepared, because let's say you didn't have a strategy and there wasn't something that you were familiar with, then obviously you're just trading blindly. But if you do have a strategy, then you're trading a style, you're trading a setup that has previously worked for you multiple different times. So if it has previously worked for you multiple different times from you trading that specific setup, then you just continue to trade that specific setup and continue to refine and build that strategy as best as possible to obviously make sure you can get as comfortable and as successful trading that strategy. And obviously the way you can obviously get successful trading that strategy is just literally trading it, just trading it as much as you can real time, seeing it on the charts as much as you can real time, because that's literally just going to build up your muscle memory in terms of understanding how price moves from these areas, and also just understanding how to best trade these areas that you're looking at. So having a set built strategy is going to be very important for you. And let's say that you are kind of lost, you don't really have a strategy. Start to put pieces together. Start to understand what works for you, what tools, what levels work best for you, and just put those pieces together and, just kind of build your own. I will make a separate video on how to actually build your own strategy / plan, but that's going to be number 4. Now, moving on to number 5, this is going to be very important as well, just like all of the others. As I mentioned, this is going to be risk / size management. And the reason that I put this down is because I see a lot of you guys entering trades with position sizing that you guys probably shouldn't have. And the reason that I say that is because let's say you guys have like $500 in your trading account. You're entering trades with about $400, which is absurd, right? Because that's more than what, 80% of your trading account, 50%, half of your trading account. And you always want to make sure that when you are trading, the amount that you are putting in the trades should be a small percentage of the amount that is in your account balance, if that makes sense. So say that you have only $500 in your account, you should only be looking to trade $50 to $100, right? Maybe a little bit more. You only want to look to trade a small percentage of what is actually in your account balance in your actual trades. Because let's say that does flip on you, that trade does flip on you, you're not just losing your trade, you're losing your account balance, right? And as traders, we need to understand that losses are bound to happen. So we just need to make sure that we manage these losses to the best of our ability and manage these losses correctly. And the way that we can do that is by having correct risk and size management. Obviously, size management is, like I just mentioned, not putting too much into our trades, only putting a reasonable amount into our trades, slash only putting an amount that we can afford to lose in our trades. And then obviously for risk, it's the same exact thing. Just simply putting an amount in that we can afford to lose. And that amount is a small percentage of our portfolio. So, size slash risk management is very similar. It's simply just understanding what to put in and what to risk. But you want to make sure that you are doing it correctly and you are understanding it, because if you aren't, like I mentioned, it can flip on you and it can be very, very ugly. I'm sure you guys are aware of that. So that's why correcting your risk is very important, because also, like I mentioned, losses are bound to happen. Losses are going to come, but the best way that you can manage those losses is by making them small, making your losses smaller than your wins. If your winners can stack over your losses every single time, your losses shouldn't even be an issue. You know what I mean? So that's why having correct size slash risk management is going to be very, very important. But other than that, I'm going to wrap up the lesson here. Hopefully you guys found value from it. If you guys ever have any questions or anything like that, per usual, feel free to ask me in the Discord or DM me. Other than that, if you guys haven't watched the previous masterclass lessons, make sure you check them out, and I will see you guys next time. Much love.